Monday, November 4th, the day before we find out whether Emperor Trump returns or we're stuck with Queen Coconut Kamala. Anyway, the stock market did what the stock market loves to do, which is kill folks. Now, look at this open here on SPY, right at the blue line, 571.18. You immediately nuke down for 2 strikes before retracing the entire move. The way we want to think about that is, one, this retrace is obviously very bullish, okay? And 2, there's always going to be a swing at the open, right? The open, the first hour is the most volatile part of the session. And like always, we don't want to be late. Like this bear, this is super, super late. And what happens is you swing back to the blue, dip a little bit, and then we push to 572. This is the important part. So we just said this is bullish because you're going down 2 strikes, you're returning to the blue. But what happens here is important. And if you want the move to continue, right, if you want the move to continue higher, we have to hit 572 and just break past it and push that second strike, which is 573. So if you notice, go back to looking at it, every time we get above 572, right, it just comes back down. It comes back down, and this thing looks like it is coming to the blue line. So bullish move, but you don't get the follow through, okay? You don't follow through 572 up to 573. That, and looking at volume, what happens? Coming down, dropping like a rock. And when we see that, typically it means the move is going to stop. And this is an up move, volume comes down, stops going up. And it's really that simple. Next, when we get this kind of like ping pong, right? And you're ping ponging off 571, 572. This is happening from 9:58 until 11:22. So it's like an hour and a half. We want to chase the breakout, whatever way it goes, right? And the beautiful thing about this is, we're getting the tags. You get a bear bomb right here. We failed to break above 572, and this is an awesome trade. You get another one right here, 36.84% win rate. This is an awesome trade. Even as we start moving lower, these are all returning 100% plus. Why? Because you get a nuke. Basically, they trick everyone. They make it look right here like, oh, it's going higher. Everyone buys calls. And then Wall Street comes in. Boom. Bear bomb, bear bomb, bear bomb, nuke. But we didn't go straight down. And you never do. What happened? Well, at 568, that's the bottom. Never goes lower. And why? Because that's 3 strikes down. Count them. 1, 2, 3. 3 down, typically where you see a bounce. And that's exactly what happened. And the thing is, as soon as we get down here, right, you're watching this, you're like, hey, this is going down 2. I'm very interested when it goes down 3. And boom, you're getting KTRs and you're getting bull bombs, which means Wall Street is selling retail puts right there before they pump it up. Volume goes up. You get this nice move, up 1, up 2. It's pushing for that 3rd strike. You get a pullback. Pullback is beautiful, right? Because why? You're getting the tags again. 1, 2, bang, bang, right? But then what happens? We return to the blue line, go back and put everything on. And so down move, return to the blue. If we want it to continue, we need to fly, right? We need to fly to 572. As soon as you get to this blue line and it does not fly, you have to be scared. You have to be scared if you're in calls, or if you're a gangster, you switch to puts. That's a 357 bear bomb with edge, 46.51% win rate, and you win. You get KTR on this. You're looking at this alert right here. Win rate's pretty good, but like, you just moved down from 571 all the way to here. If you're taking it at KTR, boom, 191%. And then they close this thing basically one strike down at 570. So the big lessons here, and we have cool things coming to bring this to you guys and make it a little bit more obvious, is, hey, open session, super volatile, you return to the blue, you do not pump past 572, hit 573, it's gonna pull back. And when that's happening, you are getting the bear bombs. As soon as you get to the blue line, as soon as we touch that right here, and it does not bounce and fly to 572, you just know it's gonna go down. You could have held this all the way to 568, 3 strikes down, and then that's where we bounce. Because why? Why does Wall Street do that? Why does Wall Street follow the 3-strike rule? Not really sure. But they love to do it. We love to copy it. We made money doing this. You made money coming down, and you made money going up quickly, like both ways. I mean, it's 42 minutes, you're getting 200%, and that's an hour and a half, you're getting 161, you're getting 100 to like right here. This one, you're like, late, let me get a pullback. And it's like, dude, you get the pullback, you get the tags, they just go. Once again, you return to the blue, it's gotta push. It's gotta keep going. If it does not keep going, it's gonna pull back. And keep going means pushing $1, 1 strike. It's gotta go a strike higher. And every time you might be looking at this, and you're like, oh, it's definitely gonna go this time. But obviously it didn't. And if you switched into bears, as soon as they came in, 46.51% win rate with edge, you absolutely crushed it. This part at the end, we traded it just a little bit. It's like not great. It wasn't happening very fast. And when it's not happening very fast, we just don't care. I mean, this is what we want. A perfect tag, even if you're a little bit late, within, this is only 1 strike down. You made money. You got a perfect tag at the bottom. You got a perfect tag here on the pullback with bulls going up, right? Absolutely beautiful. I mean, look at that. That's what you want. This at the end, you can use strategy here, but this isn't easy. This was not fun. We were in it, and it wasn't even that great. This is amazing. This is amazing. This is amazing. Try and crush the easy ones. And when it's hard, when it's difficult, and when it's not moving in your direction, and it's not moving quickly, it's not going from 20 to 30 to 40 to 50% in profit, and you're thinking about selling, which is a bad idea, get out of the trade. Because the right ones, they go quick, and you make so much money so fast, it is unbelievable. Thank you, and we'll see you tomorrow.